It's been one of many disastrous IPOs this year, but it's now the time for investors to look at Uber in a slightly more positive light. Hello, I'm David Jones. I've been a technical analyst in financial markets for 25 years, and this is our YouTube channel dedicated to US stocks. We had earnings from Uber just at the beginning of November, so I thought we'd take a look at them. The share price is down 40% from where they IPO'd in May, just earlier this year. So what we're going to do, we'll jump on the chart, take a look at the reaction to earnings. I'll come back, talk about those earnings in a bit more detail. Then we'll go back into the chart, look at the technicals in more depth and see, well, actually, is it now time for Uber to start building a base? As usual, if you're watching and you haven't subscribed, if you can click on subscribe to support the channel, we push out a couple of videos a week. We'll continue to do that. Let's catch up with how the market reacted to Uber's latest earnings. So here's the reaction to the market, by the market, to those earnings in early November. You know, the price was trading around about 31. The earnings came out and they still pushed lower. They traded another 15% lower at the extreme, down towards the 25.50 level. We're going to come back and look at this in a bit more detail, because even though it sold off heavily, you know, I'm wondering, did we finally see Uber start to build a base down here? Let me talk about these earnings in a bit more detail. We'll look at the big levels to watch, then we'll come back onto this and just dig down a bit deeper into the chart for Uber. We're going to go back into that in a bit more detail in a couple of minutes' time, but let's talk about those earnings. Uber is still losing money, but the earnings were a bit better than expected. The loss per share expected was about 81 cents per share. Uber came in delivering a loss for the quarter of 68 cents per share. So a slight improvement, still losing money, but on what the market was expecting. It also beat revenue expectations. The broader expectation was for about $3.69 billion in revenue. It came in at $3.81. So again, a slightly more positive number there. But let's not get too carried away. It's still a net loss of over 1.1 billion. So Uber is still a loss-making new IPO, but the company did say it's targeting profitability by 2021. So still a bit of time to go until we start seeing some more positive ink on the Uber balance sheet. Let's talk about some of the levels, technical levels that have left behind. I think that the big sort of technical level for Uber is the closest one I've listed here. It's just ahead of $34 a share. The last major peak, I think if we can get through there, it's still a way away from where we're trading now, then we can start to look at maybe a more extended recovery for Uber. But let's look at the levels on the downside. After the earnings and in recent days, it's traded as low as $25.50. So that's the absolute low we've seen so far for the Uber price. And after that, I think we're just talking about psychological levels, $25 and then $20 after that. But I'm wondering, you know, because we had maybe slightly more positive earnings, only a little bit more positive than expected, will we see Uber start to build a base down here in the mid-20s? And there could still be an opportunity for short-term traders anyway. Let's jump back on the chart. So let's go back right to the very beginning, which isn't that far back. Of course, it's just to May of this year when Uber came to the market. The IPO price was set at $45. Briefly traded above it into July, but since then the story has been one of a decline in price. You know, if we just put a simple trend line on this chart, it's pretty obvious which way the trend is. I'm actually going to contradict myself straight away here, because it was obvious which way the trend was if we go into the October lows, but it did manage to break out of that trend line, but didn't really take out you know, the previous major level only from a month earlier, from back in September, around about 35.20, that sort of area, and it slipped lower again. So I think, you know, we do have this downtrend still in place for Uber. It gapped lower on those earnings. You know, we did see it push lower again, and in the short term it is oversold. We've got a 10-day RSI running on here, and you can see in the past the oversold extremes on the RSI haven't done too bad a job of calling a rally. So maybe we will see the price squeeze a little bit higher from here. You know, as a trend follower, you know, I'd have to say that trend is still down. It's too early to think about starting to pick a bottom for Uber. But I'm wondering, because we did see those earnings beat expectations, clearly they still lost money, but maybe not as much as the market was expecting them to lose. I wonder if it is an interesting one down here. So let's look at the levels that Uber has really got to break to shake off this existing trend. I think for me, if it gets back above 34, so 33.90 was the October high, if we start trading through there, then it does look as if, yes, this downtrend has finally been shaken off, and I think we can start to sort of revert to looking to buy the dips in Uber rather than selling any rallies. So at the moment, I think for maybe medium to longer term investors, there's not too much of a reason to get excited. But perhaps for short term traders, those for looking for positions over a couple of days, couple of weeks, let's flip it over to the hourly chart and take a look at that. So we have seen a sharp reversal so far on the intraday charts off 25.50. 6th of November lows, 25.50, the market gap lower, but then rallied and left that level far behind. So I think, again, an aggressive trade here, if you really want to be a buyer and you think you want to get in early onto the recovery for Uber, is to be a buyer on dips on the short-term charts, but stops the other side of 25.50, maybe even the other side of $25 as a psychological low. So I think undoubtedly in the medium term, that trend is still down, but we are oversold on the daily chart. Looking at, we've got, a 20-hour moving average on here. We are trying to get above that moving average. Perhaps we will see a bit of a squeeze higher from Uber from here, but I think for longer term investors, we really need to see those mid-30s, $34 taken out to finally suggest this trend is over. So opportunities for traders, maybe investors still want to sit on their hands a little bit down here. So it's still weak, the trend is still down, but maybe Uber could start to build a base around about this $25, $27 area. We'll come back to it and see in a couple of months' time how things are faring. But for this update on Uber, we'll leave it there. So from me, David Jones, good luck with your investing and trading.